Welcome to Vol Stars, where we talk everything markets and those who make them. Today's episode is brought to you by Anduril Industries. From the mind of Palmer Luckey, the Oculus founder who discovered a way to combine games with seasickness. Anduril is taking seasickness to a whole new level with AI boat drones that don't work. The Navy raves that Anduril is a contractor with, quote, continuous operational security violations, safety violations, and contracting performer misguidances. Anduril, revolutionizing seasickness. And finally, by GammaStrike, providing actionable real-time data for every type of trader. You've tried the rest, now try the best. GammaStrike.com. I'm Jay Fresh, and I'm joined by my co-hosts, Gherkin and Dork. One day I'm going to say that without stuttering. Let's get into the market overview. Actually, before we get into the market overview, I would just like to say I was shocked to learn as I was investigating Palmer Luckey, because he showed up his Anduril showed up in the news, that his sister, Ginger Luckey, is married to former U.S. Representative Matt Gaetz. Which
Was she formerly married to him, or did she stick with him through all the sexual misconduct allegations?
I'm assuming it was their boy, not his boy. Honestly, it'd make a lot more sense, wouldn't it?
I suppose so. Yeah.
I mean, okay, this will probably get cut. That's fine. Matt Gaetz, it seems like an incredibly sleazy kind of guy. Doesn't strike me as a boy chaser.
How
I don't know.
How does a boy chaser strike you?
Very gently with consent.
Is that how it went when you were a boy? Jay Fresh, if you need to talk to us about summer camp, we're here for you.
All right. Well, all I'm saying is I think the boys might have been Ginger's boys.
Also, the correct answer was like a smooth criminal.
Oh, no. All right. Well, I thought I was going to get through this one without being canceled, but I'm once again canceled. This is episode 10. I've now been canceled 10 times.
You do it to yourself.
I did. Well, most things except for the stuff that Matt Gaetz did.
God damn it, Jay Fresh.
It's fun. It's fun.
He just, I mean, he just seems kind of greasy, but I don't know much. I just grew up around greasy people.
Ooh,
he's a greasy one.
Well, you've cleaned yourself up quite well.
Well, thank you.
You don't look very greasy today.
I reduced my greasiness by at least 10%.
Thanks to you. Do we need to plug? We need a new product to plug next week.
Shit.
Maybe tell me offline and we'll plug it next week. Okay. News topics. It was a slow week, but Black Friday. What are we thinking? I've been reading about it all day. We've got 3 numbers from 4 different people, and then everybody else quoting their own wrong numbers, and then everybody else has their interpretation. Yeah, everybody has their interpretation, which is spanning from the consumer is strong and resilient, taking the the U.S. Treasury approach, or saying that, oh, this is barely keeping up with inflation. So I think, for example, one number that we have is Black Friday sales were up in total 4.1% year over year, and that was, if I open up the right window, my windows are gone.
On top of what's been like steady 3 to 4% inflation.
Well, yeah. So one of the numbers was total numbers, and I think one of them came from MasterCard, and one of them came from Adobe something or other. And I think the total, the 4.1% year over year, was MasterCard. I might get these flipped. It doesn't matter for the discussion. But the online sales were up like 9% year over year, and I think that was Adobe Analytics. So yeah, I mean, it depends on how you look at, right? And you have to keep in mind, I think Salesforce also came out with a number I think Shopify had some numbers, and you kind of have to keep in mind that all of these numbers are not in aggregate. They are the window that these transaction intermediaries have insight on at the time, right? And so we're getting kind of these incomplete pictures. Numbers are always going to be up, right? I mean, being down would be catastrophic. But I think that's kind of the question. Is this telling us anything or not? Is the consumer weak or strong, or is this just a lot of hand wringing?
You know, I mean, we lamented about this a little bit, but like the idea of trying to glean consumer health from Black Friday sales, I mean, I feel like it's a fool's errand in a way because the holidays are really for most people, you spend the money, you get the gifts, and everybody's happy, you feel good. I mean, your financial standing for most people is generally good enough that they can spend the money, and then, whatever happens after that, but it's like for Black Friday sales, I think to actually not show real incremental gains, if not small, but 1% real gains, CPI adjusted, it would take the consumer being in the dumpster, right? Which we're
Yeah.
not quite in the dumpster, we're just hanging out by it, giving out hand jobs for 20 bucks, like
I don't know. I would actually argue that the majority of the country has been in the dumpster for a while, and we just have bad statistics, bad statistical methodologies to handle our modern times. But that doesn't matter because all of the monetary decisions are made on the statistics we have. So that is not a super useful discussion for a trading show. But anyway, okay. So my thinking of this is I've seen people spend this in as many ways as you can imagine, right? I mean, on the one hand, you look at like the 4.1% total year over year, which is barely keeping up with inflation, and people are saying, okay, this is bad, right? On the other hand, you've got like the 9%, and I think there was 7% in other places, and that could look good. And if you compare that to another data set that seems to be sort of divergent and confusing is that job cuts are the highest now than they've been since 2020, but at the same time, like tax revenue on income is also fine. So you kind of have like this data set where half of it appears fine and half of it appears to be really struggling. And to me, the larger message is that wealth inequality is increasing and is largely deviating from those average. We operate on the median or the average, and it's like that adage of like if the Air Force creates the pilot seat that is the average of all the measurements of all the pilots, and it ended up fitting no one, right? Because nobody is actually average. They all have quite a distribution around the average. And so by creating this average, you created something that served no one. And I think that fits this situation quite nicely. Our average measurements that we're using to get an aggregate sense of how things are doing is sort of serving no one. And I think that the Black Friday numbers are just sort of a continuation of that reality where you have this strong deviation from average, where you have some people that are doing really well and a lot of people who are doing really poorly. And on average, they look like they're doing fine. I don't
yeah.
know. Am I crazy here?
I mean, no, I think you're right. I think we have a like a kind of a bifurcated economy where, I mean, the last Fed
Say it.
page,
Say
what,
the letter.
which K-shaped.
K-shaped. There it is.
Mm. Yeah, I mean, the Fed beige book, the last one, outlined pretty well that lower and middle income consumers were simply spending less. Meanwhile, high end consumers were spending about the same, right? And if we consider that, and then we consider inflation, I would say the year over year growth in Black Friday sales is pretty unimpressive. I did notice that it seems that more people are shopping online, and anecdotally, I noticed the deals for this Black Friday are substantially better than anything I've seen in the last 5 years. And I think a big chunk of that is because of front loading of inventories that happened back in April of this year in response to the tariffs. And I think those inventories have been sitting stagnant a while with consumer demand declining broadly. Because even though, the highest earners are spending the same, there are significantly more lower and middle income households that are spending far less. Um, and I think a lot of those inventories have been sitting static, and the discount on those inventories is pretty impressive. I mean, I bought a couple high ticket items this Black Friday. I got a new laptop, which I got at 40% off of MSRP. And then I got all new phones across my whole plan. So like 4 phones and 2 watches for fucking nothing. I spent $0 on $8,000 worth of electronics, and my bill is the same as my old one. So I want to argue that realized revenues from this holiday shopping period are probably going to be substantially lower.
I just want to make it really clear for our viewers, our listeners. Top, would you say like top 5% New York City? I don't know. You're like top 1% everywhere else, but top, we'll say top 10% plus guy in a big metropolitan area.
Yeah, New
doing
York City.
okay.
New York City definitely. I'm weighted lower. Definitely 1%.
Yeah,
is the rest of the country.
is doing so top 1% in the country is doing okay on Black Friday. We just got that out of the way.
But I mean, anybody
I'm kidding.
anybody can go out and get 4 new phones for nothing, right?
I'm not gonna lie. Does this make me a bad parent if my son had my old phone, somehow lost it because he's 10,
Yeah.
and I think I'm just gonna upgrade because my phone's like 3 years old. I feel no, I don't feel compelled at all to upgrade based on like the phone's capabilities.
Yeah, no,
But
that's something else I noticed, but I want to talk about that in a minute.
I have no desire to like my phone does all the things that I want my phone to do, and I'm not like, if only my phone could do this.
Okay, I'm going to talk about it now. So I've done
right.
a ton of research on cell phones because I wanted to replace all the phones I have on my plan, and I just have the phones for everybody in my family, and I pay for them, and like everything is like $1,500 to $1,700 for a new phone. And this, like, I had a Galaxy S21, and those are by model year. So 21 is 21, 25 is 25. And the upgrade to the S25 Ultra was just parallel. I mean, like, the chip gets a little bit better. There's a slew of fucking AI features, which I'm never going to use.
Yeah.
And then the screen's a little brighter. But
okay, cool.
like, I mean, my battery had 5 years of use on it, but honestly, the
you got
rest of
5
it,
years out of a battery?
yeah, never.
Damn.
And I charge it to like 100 every night. I'm completely irresponsible with it. And I've never once been in a situation where I felt like the move to a new, $1,700 phone was flat. And I really feel like the new phone, I'm not getting anything extra. The battery life's a little longer, the screen's a little brighter, the processors have moved up incrementally. But there's really nothing like, I mean, you have the foldable phones, I guess, but those kind of suck. And they're weird, and they have strange aspect ratios that no one's gonna actually want, and no app support. And so it's just, yeah, I mean, if I were a consumer that just simply did not need to change my phone, and mine had a problem. Like the SIM card, like holder was messed up, and like the SIM card would joggle loose all the time, and you lose service, and you have to do like cycle it through airplane mode to get it working again. So I really needed an I actually needed a new phone. But if I didn't, I couldn't think of a single valid reason for replacing it.
Hmm.
Because the new phones do all the same shit the old phones did. And they keep trying to like add new things to them, but it's a big industry that's just plateaued. And
Oh,
there's
sure.
really no, I mean, and this is significant for, Apple, Samsung, Google, memory demand, right? I know Samsung manufactures a ton of memory, but also chip demand for, ARM processors and Xenius processors and the Apple M, whatever they have now, 4 or 3 or whatever they're putting in the iPhone
I can
7.
never keep up because I think they still are selling the M3 through the M5, I think. I'm not sure, but
Yeah.
different devices have different.
But they're I mean, you look at an iPhone 14, a 15, a 16, and a 17, and it's like the camera got a little better, but nothing else changed. So what are the reasons to like go out and buy new ones? And I guess it boils down to like you've lapsed the security update cycle.
Yeah.
Um
Or it's just free to do so
and
based on the plan you're already paying for.
and I feel like no one's talking about that at all right now. Like I haven't heard that brought up anywhere. And cell phones are still, a huge, billions and billions of dollar industry, and it's just like, how do they break that cycle? What's next? Are they gonna make them smaller again, even bigger? I don't know, but they're not
Yeah,
doing
I
any of
mean,
those things. And there's a lot of companies and a lot of revenues that depend on those sales.
I'm actually just kind of realizing that one of the things that I always sort of knew, just because I grew up in an Apple household, so I was like on, 233 megahertz machines when I was a kid, going through like old, like, I don't even remember the names of the magazines, but going through like the old magazines and looking to see like what the newest computer like RAMs were and all that stuff. But anyway, um, one of the big things about Apple was never give a discount ever. And that was something for a really long time that like Apple products just never had sales. They never had discounts. And now they have sales and discounts. And I think that that single piece of information is, I think, really striking to me. I grew up for like, I spent most of my life obsessing over a company that never did sales ever. And now they're routine. And that just is a sign of weakness, I think, that a much longer term weakness that I think people are kind of discounting. Like the fact that iPads are just routinely on sale is so bizarre to me because growing up, they just were never on sale. And I
Yeah,
think, yeah.
I
All
don't
right.
think you're wrong. I mean, so it is a long-term trend. I mean, like we've been saying, this party's been going for a long time, and this K-shaped economy got exacerbated recently, but it's been happening for a while. So
So I did want to piggyback one more thing on this topic before we move on so we don't spend all night on this episode. But, coming back to everybody, there is definitely an anxiety that's permeating the financial world right now. You can definitely feel it and you can hear it in the way that people are talking and what they're focusing on. They're looking for signs of weakness because they feel like they should be there and they keep not seeing them. And the fact that they're not seeing them is also an anxiety inducing because they're kind of expecting to see it. And so it just kind of messes with everybody's worldviews and messes with everybody's models of how things are supposed to work. And I was talking with Dork a little bit before the stream about, I think a lot of this has to do with the fact that most of the new money growth is happening off of the books of commercial banks. I mean, I was just looking at the Fed H8 tables, which have data up, at least when I looked yesterday, they had data up through, I think, November 19th, weekly data on bank loans. And if you look over the year, it's like loans in auto loans, credit card credit extensions, home loans, HELOCs, like all this, like even commercial and industrial, all this shit's flat. What's the number that's going up, 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 up? It's non-bank financial entities. It's
Yeah.
private credit, private equity. All that shit's off the books. It's your Klarnas. It's your buy now, pay later. It's your, we've had three subprime auto lenders go under over the last couple months. And nobody really has a whole lot of insight into, how systemic is it? How stressed are some of these books? How much collateral do they really have? You can even extend this over to crypto, right? People are talking about Tether and starting to get a little worried about what the fuck is on Tether's books. What are they collateralizing their one-to-one stablecoin with, right? And I think this issue of collateral on credit is becoming a systemic thing that people are starting to worry about because it is so opaque, right? You've taken this opaque system, and the biggest players in that system are opting to move it to basically move it to the dark. And anytime you choose to move things to the dark, there's always this lurking question of why? Why did you move this out of the light? What are you hiding? Maybe they don't have anything to hide, but we don't know.
Well, to kind of add to that, I just put in a couple charts from the Sluice report that kind of corroborate this. I mean, banks really haven't been getting super down with the consumer lately, right? Everything tightened up when the Fed jacked up rates, and then now it's like we haven't seen any sort of a real recovery in bank willingness to lend to consumers. So you're right in that regard that we are still in relatively tight, credit conditions for consumers. And I think that what we're finding is, yeah, there's these spivs that are existing that are basically getting the risky balance sloughed off onto them from these larger banks that don't really want to lend to consumers in the first place at this point. I mean, the recent report came out that, what was it? 1 in 4 people who apply for a credit card get declined or something like that. Like, it's some crazy number like that.
Yeah, I did see that. It was something like 20+%. I don't remember what the actual number was, but I don't know if it's high. It sounds high, but
It's high as fuck, dude. That's like the highest it's ever been. It's super high.
I'm just thinking back to when I was a high schooler and then a little bit into college, and I worked in retail, and we were being pushed. It was basically we were at a point where they were like, you need to do this many credit card applications a week or we're going to cut your hours, which just exacerbated the problem because then you have fewer hours to get credit card applications. But anyway,
Same as it ever was. That was like me in retail too. Is the same exact shit.
but I think even like running people who were 17 years old and stuff, like people we knew that would just get auto declined because they just weren't eligible for credit. I think 25% is a pretty significant number.
It's pretty hard. I mean, yeah, no, I knew my own percentages back then. It was like, yeah, maybe 1 in every 15 or 10 was declined. But yeah, I think that it's obviously it's one number, and we're trying to boil down a multitude of factors here. But I mean, considering what we see, yeah, it just seems like we're kind of playing musical chairs with the leverage that's already out, and then giving money to people who we think are still low risk, which is really not that many, and it's purely just institutions, right?
Well, just to put a caveat on it, because Ron posted this in the chat. This is from CNBC. It says nearly 1 in 4 Americans without a credit card don't qualify. So that is a pretty big caveat. I don't
Yeah,
know what
that's a
that means.
huge
It's not
caveat.
1 in 4 Americans. It's 1 in 4
No.
Americans who are at the bottom.
Trying for the first time, yeah,
So,
for Thanksgiving or whatever, for Black Friday.
okay, so I will just caveat that discussion with that might be a nothing burger. I don't know.
That's still pretty high. I mean,
It's
considering
high. I do
considering I
say
got a credit card without even trying for my fucking credit union when I was 17, I think it's pretty fucking high.
yeah, I'm just saying that I haven't done my own due diligence to provide color on the statistics to say one way or another
It's
whether
provocative, Jay Fresh. Gets the
it's
people going.
I'll get right. I will say that we provided the data, hopefully provided enough nuance to it that you go do your own research. But I don't want to be accused of bad statistics to get.
I'll take the heat on that one.
Okay.
I just scrolled past it. I was like, huh. I moved
Well,
on.
I
So
remember seeing that too, and I do remember thinking that was high, but I hadn't looked into it. But yeah, okay. So, Girk, any final word on this before we move on? About is the consumer good or bad, and are we going to know ahead of time that they're weak, or is it all just going to blow up in our faces all at once?
I mean, yeah, I don't think this just Black Friday alone is going to tell us much, but seeing what the revenues look like come earnings time for retailers through this period is going to be important, because I mean, I'm at least in the early stages of hypothesizing that they're not doing too well.
I'm going to say that I think that earnings are going to come in largely in line because the holidays, you spend the money. That's it. That's my entire thesis. So it's very weak, but I have a feeling that people are still just spending the money.
Yeah, I will just say, yeah, I kind of agree. I think there's going to be some blend of we don't know how much people are getting into buy now, pay later to keep it going. We also don't know how much of it is inflation that we're undercounting, because I do think we systematically undercount inflation. Um, so yeah, but I think
Not
we'll leave it there.
systemically, hedonically. Okay.
Well, yeah, actually, yeah, that's a little bit different than systemically, but sure, yeah, well, that's a whole different discussion. But I'll leave it there. We need to move in from the anxiety around Black Friday to the exuberance of the Santa rally.
Isn't
Woo!
Are we ready
Ho,
for
ho,
Santa?
ho.
well, we've gotten several consecutive years of Santa rallies since 2021.
We're ringing the bell. Everyone
I don't
start
know. I
drooling.
mean, a Santa rally is kind of just like a big end of month. It drags on longer because everyone's got to get their books in the black. So I guess it depends on how much window dressing there is, but stocks are still near all-time highs and things are overvalued. So I mean, it seems like the pressure should be to the sell side. Generally when you're going into a Santa rally, you're coming out of, what everyone loves to call like the seasonal dip between like October and November. And so you're just kind of rallying back to mean for the year, sometimes a little higher, but we're not really coming out of much of a dip right now. I
We
mean,
got the seasonal dip, Girk, and we went down about 450 basis points, and then we just dick rocketed back up as if we were recovering from a crash.
yeah.
We'll talk about that a little later, yeah. Or maybe we could just talk about it now. I mean, why
Fuck
not?
it, why not?
Let's do it. I like how you're throwing in just enough f bombs to keep the 5-year-olds out.
That's what I'm here from. The cayenne pepper
Yeah,
on the stream.
keep them nice and um.
We got to give them enough
You know
questions to
what?
ask their
You know
parents.
what?
All right.
I'm not even going to go there because it was a Mac H joke, and
God damn it, Jay Fridge. Shut the fuck up.
just kind of thinking of like veal. Like baby cows. You got to keep them nice and
Stop.
tender. You don't want to. Sorry.
Stop it.
Okay.
So much to edit out.
I know it's gonna be great. This is gonna be like a 5-minute long episode. It's gonna be awesome.
Meanwhile, Ron's got to sit here recording the whole thing. Get fucked, Ron.
He has to hear all this shit.
What's actually really funny is like today I was thinking, we could do like a belated Thanksgiving thing where we could say, what are we thankful for? Because we didn't do that last week, and I was gonna say I was thankful for Ron. because he is such a great producer. But then I was like, yeah, fuck Ron.
You don't tell him those things. Are you
Yeah,
kidding
I
me? Yeah.
know. Okay. So back to the Santa rally. What if I told you that these statistics are bullshit?
Why, JFresh? They seem to be so consistent, right? I mean, it seems like, every time the
Think
market moves this percentage, every time afterwards it does this percentage.
this is starting to become a thing. I don't know, like the financial media and then like all of the people in social media, they all get like it's like a virus. It's like a virus that lasts about a month. They all get obsessed with these weird statistics where there's like 5 data points, and you'll get all of these different things. It's like the last 6 times this happened, the stock market either moved -4% to +2%, but 4 of those 6 times were positive and not negative. And it's like, I want to blow my brains out. You're telling me nothing statistically relevant at all. You're just quoting random numbers and assigning value to random numbers.
Yes. It gets people going, JFresh. That's what you don't understand, all right? It's baity. It gets them to click, all right?
Well, because you think about it, even if you're on this yearly time frame, right? I mean, most investors, I don't know what the lifetime is for the average like person who is all in on investing and watching, daily and monthly variations. But it can't be more than like 7 or 8 years, right? I mean, with the burnout and stuff. I don't know, Girk. You can correct me if I'm way wrong, but they have 8 data points. So they themselves, even throughout the average life of their career, do not have enough statistics to say anything. And so everything that they're like, it's like, oh, 3 times in the past of my 5-year career, we went up in December. Therefore, we're going to go up in December. Like, that's not statistically meaningful. I don't know. I still don't believe in the Santa rally, but I do believe in window dressing and those other things. I believe that a lot of other people believe in the Santa rally and that they have reasons to buy. But
That's all it takes.
yeah, I know. I've rambled for a while. Somebody cut in and provide some color. Is there anything else to say about the Santa rally, or should we just move on?
Well, I just want to point out too something that you have said a lot, and I think is a big piece of statistical rigor. When you talk about statistical effects, you want to make sure that the deviation is smaller than the mean. If the deviation is greater than the mean on your statistical analysis, it's pretty much meaningless. So, and a lot of these things people pull out of their asses, the deviation is far greater than the mean. So it's not like they're getting anything important. I think that's just something that's important to put out there. It's not rigorous. It's very much like just slapstick statistics. And I agree. You shouldn't put a lot of weight into it, but also, yeah, you're correct. The people participating in the market, if they believe something enough, it will happen. Just in aggregate, right?
So now I want to move a little bit from belief to data. Where are we at? How is the market positioned for December? I have some thoughts, but I'd like to not have the first word if you guys have some thoughts.
I have not looked since Tuesday, since I have been in a beer and turkey induced coma with my
Okay.
parents.
I'll
I mean,
I'll pro-
we're pretty flat since October right now. I mean, technically we're in an uptrend, obviously after our recent like 6% downside. We gapped up into that, so things are getting more elated again as we approach the end of November. There's room to the upside, there's speculation, vols down. So I mean, bullish.
Yeah, I'm
Yeah.
just looking right. It looks like the market is
But
quite exuberant at the moment.
real sensitive to macro shocks, I would say.
Yeah, I did notice one of the things that I noticed earlier was that the historical volatility on the SPX has been increasing throughout this entire rally, right? And so at the same time, the IV pretty much across the term has been decreasing, but mostly so at the front end, right? It's like 10-day, 20-day, 30-day IV has been heavily shorted. And I don't know that I've really seen something quite this extreme where the HV has continued to rise into all of the shorting. It kind of seems like either it's going to work great or it's going to fail miserably. But it seems like what's happened since we turned around from that dip was that everybody just shorted vol on the front end as heavy as they could, hoping to restabilize things, but things haven't stabilized yet. So is this next week or two the great stabilization or the great reversion?
I don't see why it doesn't just continue. Well, with everything we just talked about, with the window dressing and everybody believing the seasonality and the Santa rally and all that, why
I
wouldn't you
think,
short vol
well,
into the end of the year?
well, there's some risks. We have the Bank of Japan decision coming up next week.
All right, so Gert's actually wrong here. The Bank of Japan meeting is not for several weeks. See how sneakily deceiving he is with his other co hosts? All right, let's get back to the episode.
There's the Fed decision, which is still, obviously a big part of this exuberant rally is the repricing of that Fed cut. It was down to like a 32% chance at the bottom of our 6% drop. Now it's back to what, mid 80s.
Mm-hmm.
So there's ISM data this week, which is obviously a key indicator of inflation, pretty important for the Fed's decision. We have import-export prices, I think, for the first time since the data fell off, so that we're getting those from September.
Wait, we're getting data now finally? Some data?
Yeah, we've been getting data. We got some last week, too.
Hell yeah.
They just canceled the data they don't like.
Yeah.
Oh, right.
And
That
then,
1
and then,
month's going to make a huge difference.
we have we have jolts this week, right? Don't we?
Think so?
I don't know where it falls though.
We should
We have
have PCE.
Challenger cuts on Thursday.
We have
It looks like
ADP and
Wednesday we have
PCE.
ADP.
ADP isn't the weekly print though.
Looks like it.
Yeah.
Yeah.
And Thursday, initial jobless claims, trade deficit.
And PCE is kind of already a known quantity. I guess it could surprise a couple percentage points.
Yeah, I agree.
But, Michigan consumer could be somewhat important. Obviously, falling consumer expectations into the holiday shopping season is not a great look. But I don't see the more important job data this week, so I'm guessing that comes next week. Yeah, we get jolts next Tuesday, so that's like another week out. We get the FOMC decision on Wednesday, so jolts will be the last report going into the FOMC decision, and then it really depends if we get the rate cut or not, I think. But Japan's got some currency stabilization issues right now. I know the Minister of Finance
think?
has been talking about recommencing intervention in the FX markets due to the rapid decline in the yen. But in reality, they need to normalize rates. And we talked about this a bunch last week. I don't want to get too far into the weeds on Bank of Japan, but it's it's a big deal. Obviously, leverage in the carry trade is very high right now. The yen is at 155 to the dollar, so it's pretty low.
And their 2-year just went over 1%.
Yeah, and the demand for carrying domestic fixed income assets is shifting substantially, and having a negative carry on their giant pile of U.S. Treasuries is not something, Japanese banks and hedge funds and insurance firms want. And that money is going to need to flow back into Japan, and buy up those domestic debt products that now have a positive yield. And there's a significant problem there too, because Japan's debt to GDP is absurd, and so far they've been able to maintain that by having 0% interest on their bonds, but that's no longer the case, and
Yeah, so
interest payments are going to skyrocket.
would you say that it's fair to say that people are kind of, I don't know, my opinion of what I'm seeing in the data, at least from the options market, is that they shorted the hell out of all, tried to get this thing propped back up. They want 6,800 and under to close in the money, December OPEX, get all that juicy premium to close where they want it so that they could then decide after that point what they're going to do with it, whether they're going to relever in or whether they're going to redistribute it to other places. But I think in the short term, the goal is keep it up at least above 6,800, just so that all this stuff can close in the money and everything can continue on hunky dory. And I think that the downside risk is, a broader worry about, the AI bubble and, just any sort of unexpected event like from Japan or somewhere that could throw a wrench into something. And so that's kind of the dance that we're playing. But certainly the market wants to close December OPEX above 6,800. Would you say that's fair?
That's reasonable. Yeah.
Yeah.
I think, yeah. If we're gonna, I don't want to assume that short vol sellers have complete control over the market, especially with so much overhanging macro risk, because they're a big deal, when everything's great,
Well,
but they're not that big of a deal if things start really blowing up.
they're really sticking their neck out there right now.
I don't want to diminish the amount of risk present in these two rate decisions out of the BOJ and the Fed. They're a big deal. And I don't think a cut is bullish. I think all the bets betting on a cut super bullish. I think the cut itself probably real bad.
I would agree with you, but at the same time, everybody's expecting a cut, right?
Sure.
What is expecting the cut do for anybody who is negatively
Nobody
affected
knows.
by the cut?
It keeps the party going for a little bit longer. Isn't that the whole name of the game? Just keep the party going for a little bit longer, and before you know it, it's 10 years later.
For the people, for the hosts of the party, right? We're talking about the major banks. A lot of the party being hosted is predicated on the ability to give people money without having it cost them too much. And when you start getting rid of their avenues to improve their margins, they're going to maintain their margins other ways, such as charging a heavier door charge, right? For people to get into the party, right? Charging an extra buck for a cup of punch. I mean, the cost of credit is going to go up.
That's inflation, and we just pretend that doesn't happen. That's fine.
Okay. I mean,
I don't know. that SOFR IORB spread was that was like 15 basis points on Friday.
We could pretend all we want, but I mean, the pretending can only go so far. I mean, banks
but it
aren't
can go really
pretending.
far.
Like, yeah,
that's the point. That's my point. Is that it can always go farther than people think, right?
Yeah. I don't know. I
All
think
right,
we're about to have to stop pretending.
Yeah, this is getting too bearish. Let's talk about price cuts in housing, kind of round out the bullishness here. So there's a new report recently that showed that the typical home listing in the U.S. had about $25,000 in price cuts through October.
Yeah, see, I mean, yeah, people are dropping the price of listed homes. Listed homes are staying on the market a little longer. Obviously, mortgage rates are relatively unchanged despite the rate cuts. And this is where one of like the largest expectation for economic improvement is, or at least credit improvement, is that we're gonna see mortgage rates come down and people are gonna start wanting houses again. But if I pulled up a chart over and
Yeah, I guess I just fundamentally do not understand how the overnight rate matters at all for a 30-year mortgage.
I mean, I don't think it does. I think the long
Okay,
end is
I'm not
still
crazy.
still
All right.
well out of the Fed's control, but that is still the expectation, is that the Fed brings interest rates down and interest rates come down. We haven't seen that yet. We've seen the Fed cut a bunch and interest rates go up on the top end.
Yeah, they go up.
But the
So
30-year fixed rate has been relatively flat since like October of 2022.
I
Uh,
posted
we've
a
had
chart.
we've had some highs and lows, but it's mostly around 6%, and that really hasn't changed the value of home prices. Home prices have moved up and down cyclically or seasonally, but and there seems to be a lot of demand for homes when the median value is around 400,000. We're not there right now, so we're seeing price cuts. But if mortgage rates were to go higher, we would probably see the demand for homes around 400,000 drop. The market would have to meet that. Probably see home prices drop even more. So I guess it's, if you're waiting to buy a home or get into a home, it's not terrible right now. It's just not great.
So I posted a chart that was only admittedly updated Q2, so I don't know what Q3 is like yet, but it's an amalgamation of data. The whole idea is if you bought a median priced home at the average mortgage rate with a 30-year loan, what would your monthly payment be expected to be? Um, and this is really it kind of tells the whole story, right?
Yeah, yeah, it
Like,
does.
I mean, that's really it. You know, you hear all this stuff from people talking about how boomers had the same challenges and things, and I mean, sure, but like that move is ridiculous. You're looking at from the average monthly payment being largely the same from 1980 to 2005 of around $1,000 a month. You see that double, right, over the course of 2 years, right? Partially because of interest rate increases and partially because the price of homes has just rocketed, right? So these housing price cuts, right? Do they really mean a lot in the grand scheme of things? Yeah, if mortgage rates go up, it's pretty much meaningless, right? And what we're
Yeah,
really
the
seeing though
cost
is
of
that's
finance is just going to
yeah,
keep
but that's
climbing, and that's compounding. So it's
yeah, but that's just a response to the chart I just posted. It's literally
yeah,
the
no,
market's response to that. I mean, no one really has an easy time stomaching that monthly payment. Like it's not easy. So, yeah, something's got to give, right? Either wages have to go up or mortgage rates and or home prices have to go down. And if mortgage rates don't go down, home prices are going to have to go down a bit. You know, and but like but more yeah,
Yeah, like
mortgage rates would have to
40%.
dump, but
Yeah.
like mortgage rates aren't going to drop that much without subsidization, honestly.
Yeah, I agree. I think somebody like the feds are gonna have to start buying more MBS if they want that to happen.
Yeah, that's what's it's going to take QE3.
Yeah, I don't disagree. All right, so that's not bullish either. Let's go to
but if
something that's
those rates do
actually
go up, the
bullish.
price of houses is going to come down.
Yeah.
It's
Hmm.
going to keep
Makes
coming
Well,
down.
yeah, it's going to that's the response is going to keep happening, right?
And
People are just going to be less
every
and
time
less
we hit
willing to buy.
those, like every time we hit that level around 400,000 for the median home price, there's going to be fewer and fewer interested buyers.
Yeah.
So I
All right,
mean,
I got one more shot at trying to find something bullish here.
all right,
Silver, straight up, 18.5% in a month.
yeah. So
That's bullish, right?
I have a bunch of comments on silver. There's a bunch
Oh
of
god. As long as they're bullish.
yeah. Well, it's like gold. I mean, and central banks have been buying gold to hedge dollar risk because we have this, we have all this trade risk with Trump, and we have, you know, dollar risk due to the Fed cutting. And so there's all this risk that the dollar is going to go down, which I don't really think it is substantially, but basically everyone's overexposed to it. And so all these central banks around the world, and very much China, have been buying tons of gold. That has helped bring the value of gold up. Obviously, speculation piles on top of that, but largely, central banks have been adding around 1,000 tons of gold a year since like 2022. And this has a lot more to do with our, kind of fiscal crisis, where we are simply as a country not managing our debt well. Our debt payments are skyrocketing, and over time, this is obviously not great for a currency. If you're a central bank and all your exposure is to U.S. Treasuries, you need something to hedge that. There's not much that you can use to hedge, the world's reserve currency besides another reserve currency, and the only other really significant universal one is gold. And so you have a lot of gold acquisition from that. And silver, silver is far more industrially used than gold. It probably has a significantly higher attrition rate in the market from mine to production, and it's used more heavily. So there's probably not a surplus on the mining side. But none of that really affects the price of silver too much. What is affecting the price of silver is other central banks, ones that maybe have a little less access to gold markets or a little less politically. Trying to think of the right word for this. Sorry.
It's okay. It's already happened to me like 3 times tonight.
Yeah, I mean, they're a little less political.
Thankfully, they were all during Matt Gaetz jokes that
I'm trying to think of the word that describes something moving through, a system freely, but
mobile.
Yeah, I'm just gonna say mobile. That's where I was going. So yeah, they're a little bit more political, or a little less politically mobile. Countries like Russia, where they have sanctions, or Iran. These countries are picking up silver, and they're picking it up because, well, their access to gold is limited. And I guess the most important thing here is that silver's really got a lot of gold beta, right? So it's just gold runs and silver does real well because gold does real well.
Would you say that it is, I'm going to make a terrible analogy here, but I think you'll appreciate it, and maybe 5 other people will too. Will you say it's kind of like if somebody buys a bunch of GME stock, there's going to be a bunch of people that also buy AMC?
Yeah, basically.
So yeah, well, I'm glad you took me seriously. I appreciate that.
I mean, yeah, you get the same kind of safe haven flows that gold gets in silver, and you get a more volatile instrument that acts similarly to gold because it's the next step down. There's also a lot of new demand for silver, I guess, in solar. Right, solar's silver demand is fairly significant. And there's some supply deficit, which I mentioned. And so those can act as underlying support. But yeah, people are buying silver because gold's up. And central banks are buying silver, which is pushing silver up from the baseline. And so yeah.
Well,
yeah,
speaking of reserve,
noticed that. So I noticed that silver was it moved relative to gold. Silver's been going up pretty quickly. I don't know if that's a liquidity thing or what though.
There's a lot of people speculating that there's some liquidity things there. I don't know that I want to.
Probably if there was an actual demand for physical silver somewhere, if someone were trying to get physical silver.
I don't know. I have no more room. I've already filled my garage with physical Vicks.
Physical Labubus.
VIX futures, yeah, they all got delivered, and
Ouch.
yeah.
Just
But speaking
pallets
of
of VIX.
yes, pallets. Speaking of reserve currencies, I have to talk about the quintessential reserve currency of our age, Bitcoin, which is currently dipping quite dramatically right now. I'm throwing this in here because it's down almost 5%. One headline I'm reading now: Bitcoin dips below 87,000. 1 week's gains gone in one candle. Do we have any thoughts about this other than, hey, this
Ooh,
is a fun thing?
I do.
All
Remember,
right, Girk, bring in the fire tonight. He's got a bullet ready in the holster for everything tonight. I love
BTC,
it.
right?
Yeah.
Okay, because I wasn't totally listening. But
No,
I
Fartcoin.
know.
so yeah, I mean, end of month, cash demand goes up, right? I've talked about this for like 4 weeks. Cash demand goes up, short-term financing rates start to rocket. So the secured overnight financing rate moves up into the end of the month really hard. Easiest place to get your cash back is from your levered cash, which is BTC. So people are going to keep selling off BTC until we get some normalization in interest rates at the front end of the curve. That short-term cash is still a credit problem. It's still a big risk. It's still driving CDS higher. It's still, we've got a 15 point spread on the interest rate on reserves as of Friday's close. And that was a half day. I feel like it probably could have climbed higher if there was more time.
We're gonna be here all night because I mean, we all know that I saw something recently. Stephen Moran, I don't know how to say his name. The newest Federal Reserve chair member, was talking about them making progress on pushing through the modified Basel III endgame adjustments for this liquidity issue, right? Because banks, their reserves have dipped below 3 trillion, and I think that that's putting some stress on people. Is this related to that, or is this completely different?
I feel like this might be slightly related to the whole thing we talked about with SPIVs and non-bank financial institutions, and their lines of credit.
Yeah, I mean, I'm thinking too. I saw a recent chart that showed how much private equity is having to take on debt to pay out their dividends, which may also be related. I think probably suffice it to say we don't have enough information to know whether this Bitcoin volatility is related to anything systemically, but it is interesting to note that it is having so much trouble to stabilize itself, and it does seem to be. I mean, I'm looking at all of these articles, and everybody's talking about liquidations, right? It's not about just like bearishness or bullishness. It is about margin getting wiped out, which is probably the scary part about it. Like, okay, if Bitcoin goes down 50% in one day, and it's just because everybody decided it was stupid, I don't think I would care, right? It'd be like, okay, that's fine. But if it went down 50% in one day because everybody's getting liquidated, that's a little bit of a different egg to me, because the liquidation aspect of it, I think, is the scary part.
Well, where does I don't even then I don't think you hear about liquidations, but I'd like to get the sauce on that.
Yeah, I mean,
I
that's the thing.
it
I
could be
mean,
Satoshi buying a yacht.
liquidation
it's
liquidation is just
insiders who
also
are
just
aware of the
selling,
matter.
right?
Yeah.
Like, I mean, if you need if you need cash
Yeah.
and you can convert your worthless digital currency into actual real US dollars that you can
Don't do that.
pay for shit with.
90% of our viewers are Bitcoin and Fartcoin enjoyers.
Well,
Yeah,
they could,
Fartcoin also is suffering from this drop too, by the way, unfortunately.
you know what?
So
Dork enjoys Taco Bell chicken quesadillas, and yet they have no real monetary value.
Wait, can I just say that Taco Bell needs to absolutely transact in Fartcoin? Wouldn't that be like a marketing
Chipotle.
Buy your burritos and fart
Ooh,
coin.
There you go.
Yeah.
Chipotle. Yeah, fart coin.
Chipotle X fart coin.
Oh man, we
All
got to
right,
stop giving
let's-
away alpha.
Yeah.
I know.
It's all right. So
Save that for
things.
our private equity group.
So we'll put a pin in bullishness on maybe silver, but probably not. Things are climbing the wall of worry. Things are looking like the wheels are coming off a little bit.
I
We'll
mean,
see
yeah.
how we end the year. Let's get into earnings. Are there any earnings that are worth talking about? I mean, I see a bunch of them.
Yes, Build-A-Bear Workshop.
I was actually thinking that exact same one.
No,
And I don't know
I'm
why.
almost kidding, but I'm not, because those are the most boutique motherfucking thing. They're the OG Labubu's, bro.
I went to a Build-A-Bear like 5 years ago, and I was like, all right, we built a bear, and that was it. And never went back.
Yeah, did you do it on a 60-month payment plan because it was so fucking expensive?
No, I'm not that poor. They weren't that bad.
Dude, it's like $100
Dude, I have
for a
like
fucking bear.
I have like $2,000 in Labubus in my living room right now.
You shouldn't be saying that out loud. I mean, do you go like hide in the backyard to vomit over that? Because I would.
Yeah, I do.
Jay
And I have to keep them. I have to make sure I keep them all up high so the
Crippling
dog doesn't
Labubu
get them
dad.
and rip them apart, which is like actually just eating money. Like, have you ever seen a dog just eat $200?
A door, yes.
Anyway, yeah, I was interested in Salesforce, Snowflake. I think those will be interesting, like part of the AI story. SaaS,
CrowdStrike's
C3 AI.
probably interesting.
Oh yeah, I
DG.
agree. CrowdStrike, DG. What's
Dollar
that?
General.
Oh yeah,
Dollar Tree and
The
Dollar
market of the
General.
poors. Yeah.
Yeah, but they've kind of been.
Ulta's an important one.
Yeah.
For baseline spending. We get a lot of basically overall this week we get a lot of information on the consumer side. There's a bunch of retailers reporting.
TD Bank, that's kind of
we get a
interesting.
little
Do
bit
they
out
always
of the,
report
like,
this late?
cybersecurity side. Who?
TD Bank? Did anybody tell them that banks report way earlier?
They're special.
What about C3 AI? I know they're bullshit.
That's a scam,
but
dude.
No,
Yeah,
I know, but
don't-
I want to see.
Their market cap is nothing.
I want to see it.
Books
I
are
wanna
also
feel
terrible.
it in my
They're
bones.
already terrible. They have another terrible quarter. Who cares?
I care, Jay Fresh. I care a lot.
I do too. I mean, I would love to see them go under, but I don't think it.
I just want to hear. I want to hear going concerns on the call. That's all I want to hear. All right.
Listen, every company is a going concern. That is the definition of a company.
It's true. Yeah, it's a whole bunch of retail. Honestly, kind of got to take it all in aggregate.
Royal Bank of Canada is reporting.
Canada's not real.
Well, their bank is reporting on Wednesday.
All right. Well, good for Canada, I guess. Hewlett Packard's reporting on Thursday. That might be interesting. Well, they're kind of a dead man walking and have been for a while. All right, let's move on. I think Ron's got some shit to play. Play your shit, Ron.
You fucking hurry up and do it. Get out of the way.
Fall Stars is a GammaStrike podcast. At GammaStrike, we work to present options data and market maker positioning in easy to understand and actionable formats to inform your trading decisions. Learn more at gammastrike.com.
Am I also going to make my own website? It's almost what the jingle reminds me of.
No.
Okay.
Thanks, Ron. All right. Plug our forum and subreddit to ask a question. Oh, yes. Before we get into audience questions, you can go to our subreddit. I don't know what they are. Subreddit.reddit.com.
r/volstars.
There
and
you go.
r/GammaStrike.
Yeah.
Yes. We also have a forum, which we'll post the link to in the notes, where you can go and ask a question. We actually have a ton of questions this week.
Yeah, we do.
So maybe we'll kind of rapid fire because some of them are not serious, but there are a lot of actual serious questions. So let's get
Wait,
the
are
first
you
one out of the way.
hijacking my job right now, JFresh?
Oh shit! I'm sorry. Go ahead, Dork.
Look, if you want to do it, you're more than welcome. But
I do not.
okay. Okay, so the first one, what do you think of Martin Bally's firing? Where will he go and create wacky hijinks? I'm pretty sure that's the guy from Martin Bally's the dude from Campbell's, right? Who was talking about 3D printed meat. Is that right?
Pretty sure before the stream, we all asked the question, "Who the fuck is Martin Bally?" and we all had to look him up. He's the Campbell's guy from the last intro.
Martin Bally will never be given a position again where he is allowed.
I was about to say he's already working at Wendy's.
Yeah. Well, he'll get a job as an executive, but not publicly facing.
He'll be executive
also,
Wendy's drive-through operator.
Yeah.
He gave us, our 15 seconds of enjoyment, which is more than I can say I've ever given anybody. So we just enjoy it and we move on. Who cares?
Yeah, I think it's time for
it's
him
not like
to fade
he said
into obscurity.
anything world breaking. I mean, he just said poor people eat soup.
He said what everybody
and I hate the soup. Yeah.
Yeah. And our soup sucks.
Yeah.
Although I will say Campbell soup, slightly better than Chef Boyardee.
Aren't they the same company?
I don't know.
I don't either.
If you take a half cup of salt, mix it in with whatever, it's going to be pretty good. They're both the same thing.
Right.
Okay. Next question.
And it's ConAgra.
It is. Yeah, it's beautiful.
It's
all beautiful.
Wait. It's not ConAgra anymore. It's Hometown Food now.
No, whatever it is.
That doesn't sound like a real company.
It's
sounds
not.
Like the mafia.
It's like a part of an acquisition group. That
or a shell company.
Partners. Everything's just owned by hedge funds now.
Yeah, exactly. Private equity, and hedge funds, yeah. Okay, next question before we get too sad. Does the 5-day implied move on SPXW function as a similar resistance to price action over that time period as the 1-day implied move does? So basically what they're asking is like, okay, so you know how the 1-day implied move sort of defines usually defines an okay range in the intraday. They're wondering if
significant volatility events, but yes.
Yeah, I think it's pretty much the same thing. I mean, these implied moves.
No, it doesn't.
No?
No, I don't think. I mean, the 5-day implied move might define a range. Maybe better on equities, or maybe more so on equities because they're 5-day expirations. But I would say that the 0-day implied move on.
Well, yeah, okay. So I think there's a distinction here because, like,
is more important.
Like JFresh was talking about, people are longing further out and shorting shorter dated. I think the 5-day implied move in particular is kind of in a weird in-between zone where people are sort of trying to actually hedge risk rather than try to short that risk into oblivion. So I see what you're saying, Girk, especially on the index. Yeah, I mean, maybe on single stocks, it probably could be more indicative of a range, but
I mean, if you just look at like OI, like out 5 days, the majority of OI, with the exception of OPEX expirations, is going to be on the 0-day.
Yeah.
At any given time. And so the 0-day implied move has a lot to do with the range for the next trading day, because that's how options were priced when they were being bought the day before. And that's why it kind of can act as a support or resistance level, or give you an easy range for the day, because if you cross that range, options were no longer priced correctly. And if options are mispriced, you're going to get probably a push back in the other direction. Because now, sometimes you'll get a move overnight above the implied move, and it very often leads to a sell-off. And that's because, calls bought the night before are now substantially more expensive relative to how they were priced the prior day. And that's going to encourage people to sell calls, which is going to push spot down. And that's going to be have a corrective nature on the upside move, and push mean reversion. Or you open below on a really, really, you get really bearish news overnight, you open below the implied move, everyone's going to want to sell puts because the price of puts went up a ton. So, I mean, it affects the 0-day a lot. Maybe on equities, I haven't paid enough attention to it to really tell you, but maybe on equities, because they have a 5 days to expiration, it gives you a better idea on those
So
of the
can I ask you
possible
then?
range
Yeah,
for a
I would
given
say
date.
I would just add because the question is about SPXW. I think in the spirit of the question, I kind of agree with Kirk. Like all of the actions on 0 1 day, and then farther dated stuff. So I feel like in a lot of cases, the 5 day is just an interpolation of those bigger positions. Like it's not like people are actively really trading the 5 day IV in size.
But the
I might
price is
be
price has meaning though. Like I'm just wondering if the 5 day more than anything is sort of like a an indicator of just expected range, right? And I don't think anyone's playing it, which is why it probably wouldn't serve as any sort of support resistance, but it does actually tell you something about what the market is pricing in for an expected
yes,
range.
yes.
I will say I bet there's a bunch of fun arbitrage in that range because everybody's trading around it.
Maybe. Yeah,
But I don't know.
yeah. I don't
I haven't dug into it.
I
'Cause
think yeah. At first I was like maybe potentially, but I mean, yeah, when Girk explains it like that, and then thinking towards the the way that volatility is bought and sold on
Maybe if I
SPX,
were
yeah.
selling like some kind of midterm like condor kind of thing, maybe I would mess around with it. You know where I think things start to get interesting on those longer time frames is when you start to get like a big spread between like the SPXW like 5 day implied move and the SPX 5 day implied move. If those start diverging in any really significant way, it can tell you a lot about like near term demand. But other than that, yeah, I don't think
Okay.
so.
yeah, and just in case people aren't aware, I mean, usually we break up the SPX. We break up most of the indices between their weekly contracts and their monthly contracts. So we say SPXW, we're talking about the weekly, and SPX is the AM
Expiry
monthly
monthly
contract.
contract.
Yeah.
Yep.
So we
Okay.
split those up. We also look at those together at the same time as well. But
Yeah, we're working on the technology I mean, we already have them merged, but we just got to show it. So that's going to be the next thing. We put a dollar sign in front of it because we're cool like that. And then it's the two of them combined. Um, Moving on. OpenAI data breach. Is it bullish for AI? I'm going to say
Bullish,
yes.
probably bullish for OpenAI.
CrowdStrike.
It's
Um,
bullish, dude.
I mean, I've never seen a data breach that didn't lead to price improvement on the
right?
stock,
Seriously.
but OpenAI is only theoretically valued, right? And it doesn't have a tradable
Yeah.
asset, so
Yeah, mark
it's
that shit to market and tell me how you feel.
yeah. So
Hey,
I
according
mean,
to Sam Altman, if you want to short the stock, there's a buyer for it. All right.
Sam
Well,
Altman
find
he
you a
has
also
buyer.
told me that PhD level intelligence is here,
been
and
served
I
a
haven't been able to hire
subpoena.
a single AI.
Sam Altman's been served a subpoena live on stage. He has declared that we're in an AI bubble, I think twice. And then he has it's I think if those things aren't killing the desire to keep buying something that does nothing, that a data breach definitely isn't going to do it. And who
Yeah.
cares? They're stealing everyone's data anyway.
Yeah, I
So
agree. It's just mostly a who gives a shit. This is actually not their first data breach.
at this day and
we were
age,
talking.
what's the difference between going to Google and buying everyone's data and then just going and stealing it from someone else?
About $10.
A couple.
Just money, right? So you just got
Whatever
people
revenue
getting
the AI companies are currently making, that's the difference.
There you go. Yep.
Stealing versus but this is not the first data breach that OpenAI has had. In the past, anytime a user had shared a chat on social media or something, created a shared link, it ended up getting picked up and indexed by Google search. And so all of these private chats, which, maybe you created a link and just shared it with your significant other or your brother or like a friend and never intended it to be fully public. They were all, trolled by Google and now in the internet forever. And people have already done analyses on them and it's kind of creepy, but not their first data breach. So,
Yep.
and that one didn't matter. So why would this one matter? Who gives a shit? Just party on.
There you
Numbers go up. They go
go. All
up.
right. We're doing the speed fire around here. Next question: Google TPU driven AI, is it the Nvidia killer, and why?
No,
But they're tensors.
it's not.
Tensors are cool, JFresh.
It's not the Nvidia killer because people need to understand buying Nvidia chips and using the Nvidia ecosystem has nothing to do with efficiency or edge or making money. It is everything to do with what is the easiest, fastest way to string together 100,000 chips so that I can shit out some made up thing to get investors to give me money.
Really? I thought it was just they were the most willing to finance their chips.
Well, that too, but
0% financing, 12 months.
I'll just give you this to think about. DeepSeek, one of the innovations, one of the things that made DeepSeek so cheap in terms of what it offered was because that they went in and they basically wrote their own kernels because they didn't have the luxury of 100,000 H100 chips, right? They actually, I think, had some, and they had more than they let on, but they openly told people and showed them, like, look, we wrote our own kernels, like, we didn't use CUDA. And writing your own code down to the hardware is going to be so much more efficient. And you would think in an industry that is dogged by costs, where they are bleeding money because of inefficiency between what they're providing and what it costs to provide it, that they would be. That's also giving people billions of dollars to jump ship and come work for them. You would think that they would be working relentlessly for any of that, like a 1% here, 1% there, anything to get those edges. And they're not at all, because it's not a serious industry. It's not real. And so why would the Google TPU, if it is so much better, why would this be the better thing that actually kills NVIDIA? It's not about being
It's
better.
not about the chip. It's about the economics. It's I mean, I don't think the quality of the chip or the floating point calculations are important. I think it's just that NVIDIA will give me $400 billion to buy $400 billion of their chips.
They can also give it to you in size.
Yeah.
Which is a big part of it,
and Google's processing's all in the cloud. No major hyperscalers are going to want to lock themselves into their competitor's cloud ecosystem. And then Google's also not financing the purchase of the chips.
Yeah. I mean, that's a little bit of what I'm saying as well, right? It's not about a sustainable business designed for longevity. It is about that short-term hit. What's the cheapest? No, sorry, not cheapest. What is the lowest barrier to getting 100,000 chips that will make the splashiest headline to get the most attention, to get the most investor interest, so that I can keep building this stuff? I can keep playing, right? It's just all a big game. Because if these people were serious, NVIDIA would have been. There's no reason why 3 years later, with this much money in this game, why NVIDIA should still have any sort of moat just because of what? CUDA? Like, because they have kernels? Are you kidding me? Like, anybody, if you're talking about trillions of future dollars on the line, everybody would be writing their own fucking kernels. This is ridiculous. Like, CUDA's not a moat. NVIDIA has no moat. It is all theatrics. And Google TPUs are not gonna. Doesn't matter if they're better. None of it matters because it doesn't kill the theatrics. It's not until you kill the theater of it all that people will actually get serious about it.
Yeah, I mean, well, I think that the TPU is sort of part of that idea, where if Google makes their own chips, they're now part of their own depreciation cycle rather than the same depreciation cycle everyone using Nvidia is on. I think that's probably the big play that they're after here.
So I was telling somebody this earlier today, and you can take it or leave it, but I'm pretty convinced that Google is going to do whatever they need to make sure that nobody makes a profit on AI,
Yes.
including themselves.
Yes. 100%. Yeah. No, you're absolutely right. I mean, this was always going to be a race to the bottom, and they're just kicking it off, right? Like it's about who has enough cash to
Fall
withstand
Stars is a
the
GammaStrike
bleeding,
podcast.
right? I
At
mean, we're
GammaStrike,
already
we
seeing
work
the
to
bleed with
present
OpenAI. Like we already know that there's no real business model that is profitable from this that isn't exorbitantly expensive, based on the pricing models we've been seeing. So yeah, it's 100% a play to race to the bottom, offer the best thing you can at just a completely eye-wateringly low price of nothing, to the point where everybody else is like, I can't do it. And if they do that, and you know what's interesting is if it's all horse shit, is if they do this, right? Everyone else in this horse shit game at some point, like, God, I can't do this anymore. And they're gonna bow out, and Google will just reign supreme in the horse shit land, right? Which is
Well,
perfectly
it kind
fine
of
for them.
makes yeah, because they were already in it long before, right? I mean,
Fuck
this has
yeah,
been a
yeah.
long-term thing for them. So honestly, the more I think about it, I think, Google saw all these people enter and they're just like, all right, game on. We're
Yeah.
about to just drag so many people down into the mud and drown them in the muck. And
We're
then
gonna
just
offer
keep
the
doing what we
exact
were always
same
doing
thing for
anyway.
free. That's pretty much what they're doing. I mean, like they're gonna say, yeah, you know what, GPT, 5 or whatever it is now. Here's the same exact thing for $0. Here you go. And it's just it's how do you compete with that, right? When you're
Well, I mean, so it
bleeding
already
so
has started.
much.
You look at like it's actually an interesting dynamic, like cursor code and oh shit, there's another one, I can't remember what it is. But
Claude
anyway,
code?
cursor's the no. Well, here's the thing: Cursor is a competitor to. I mean, Cursor uses Claude. Cursor uses ChatGPT, right? They're competing directly with the people they're buying models from, right? And so then you've got Claude, they come out and like, Claude code and all this. But they've also like Anthropic and others have raised the prices on their APIs and things specifically to hit people like Cursor and others. So they're actually like just killing like it's interesting because on the one hand, they're really hoping that people buy their models and use them for something and pay for it. But at the same time, they're so starved for cash that they also have to kind of like drown those people the second they start to become successful. They just start burying them in additional costs. And it's just a really interesting dynamic. And it's just, yeah, it's really just a race to the
self-cannibalizing. I
bottom.
mean, like
It's like
yeah.
whoever drowns in the mud first wins because
Right.
they're just in pain for less time.
Yeah, no, it's ridiculous. So, yeah, I don't think it's the Nvidia killer, but I think that Google is going to try to kill this whole entire thing because they can. So it's pretty much Google v Microsoft right now. Nvidia is just sitting on the sideline. Like the kid taking the dab in the background of the fight, that's Nvidia right now. But
yeah, I'm pretty sure Nvidia is actually just like dragging people into their trauma at this point. They're just like,
yeah.
hey, if you don't buy my fucking chips and my revenue doesn't go up this quarter, this whole game is over. And then your stock's going to collapse and you're not going to get chips from anyone.
Yeah. Pretty much.
So
I mean,
my
yeah.
chips.
I mean, it really is. Yeah, you're right. CUDA, right? I fucked around with
It's
it a
not
bit.
it's not a moat.
It's basically C++ for GPUs. So, I mean,
It's laziness. It's laziness that works in small pools like research
or my
like
computer.
yes well sure, but absolutely, like if you're like a research outfit and you don't have a bunch of resources, absolutely, you're going to pick the thing that already has that shit all written up. You're going to use PyTorch and you're going to get on Python like everybody else.
Yeah.
You're not going to try to rewrite the book. You don't have the resources. But when you start talking about hundreds of billions of dollars, you better believe that that is no longer a moat. And to pretend that it is the height of ridiculousness.
Yeah, 100%. Yeah. I mean, I completely agree with that. I mean, when you think about modern billion-dollar manufacturers these days, when they build things, right? Except for the smart TVs, I'm going to avoid that for now. But when you talk about a purpose-built piece of gear, right, that a manufacturer makes, it is built with like the most purpose-built and custom-coded FPGAs you could possibly imagine, so that they could scrape every fraction of a penny that they can out of this thing while maximizing its performance. It's how you build things to be able to be competitive. And for some reason, you're right. All these AI companies seem to love this idea of just, especially Jensen going off on CUDA, right? Just saying like, yeah, here's your little box. It's going to be perfect for all your needs. And it's like, when you think about what CUDA really does, I mean, it packages a lot in there. Okay. I'm not going to say it doesn't, but when you only needed to do specific things, why are you going to take the entire universe to do it?
It's great for amateurs and small outfits. It doesn't make any sense.
It's a proof of concept machine. It's not a production
Once you
level
hit
thing,
hundreds of billions of dollars, it makes zero sense. Like if people were serious, like nobody would be talking about CUDA today after how much money's already been spent.
Yeah.
It's just ridiculous.
Well, but the problem is that it takes too much. That takes too much time, Jfresh, and
get me off my soapbox, Dork. Move
okay.
on.
Next question. Okay, hypothetical. Oh God, you're gonna stay out right there where you are. Okay, hypothetical. Assume the AI bubble pops. When's the time to go long stocks again? What time's the company? Okay, so market crash. What am I buying? That's pretty much what they're asking.
This is a good question. I refuse to engage this question.
I mean, if the AI bubble pops, we're back to just the usual. I mean, you go for like, what is it? The stuff with good cash flows and nice operating.
It really
revenue
depends
and
on why it
model.
pops, though.
Yeah, exactly. We had this question before. I think it was episode 5.
If this is a volatility event, like the last 2 or 3 crashes have been, you'd buy everything. Who gives a shit?
Fucking buy SPY. Who gives a shit? Yeah. But yeah, no.
But if this is like a 2008 where things like actually start to come unraveled, you still buy everything, because that was also just a volatility event that was backstopped by the Federal Reserve. Just buy everything. Who cares?
Wait, it was all vol? Always has been.
The dot-com bubble versus the 10 years after, it wasn't the best performance.
Well, yeah, that was a real crash, and I did not include that in my list.
All right. Well, there's a lot of stuff that's, not done well in the wake of all of this AI investment, specifically companies that have just been around forever.
Cisco?
Well, consumer non-durables have done really poorly. Health services have done really poorly with the backdrop of, of the current administration. Consumer services have done really poorly.
Yeah.
And so, I think there's some areas where there's potential for improvement, but I mean, really, if the market were to tank tomorrow, you probably want to bet on, safety. There are emerging technologies that are somewhat interesting, that aren't AI. There's quantum, but that's kind of still in its infancy.
Just buy Google at that point. Why? Like, if you're just going to invest in quantum, just buy fucking Google, because they're the ones who are actually pumping a ton of money into it.
No, there's IBM.
Not to turn this into a quantum thing, but Microsoft's got some. As much as I shit on all of these,
didn't they make a chip?
Hyperscalers.
Cool.
As much as I shit on the hyperscalers for all their fake academic, articles that they post on Archive, Microsoft's done some cool stuff on quantum. I'm not saying quantum is like a viable thing yet that you should invest in, but from a scientific perspective, Microsoft's doing some real work.
There's like the micro reactor industry, like SMRs and like these small reactors and these thorium reactors that could be, the next infrastructure rollout for expanding and reinforcing the US power grid.
I'm
However,
shocked it's not already, honestly, but
if
yeah.
if the crash happens because data center demand goes in the toilet, we've got enough energy. So
The thing, but I mean, but the thing is if there's
What if
another
data center
push,
and crypto worldwide went in the toilet? We'd have so much energy. It'd be like, what do we do with all this shit?
yeah, look, all right, I don't want to get it. We're trying to back slowly off the soapbox here.
I'm just saying, we're trying to predict a future where the swings could be wild in either direction. You could
Honestly,
go from super abundance, like excessive abundance, to strapped for resources. And
so here's what I think. So if we're looking at the technology space, I mean, yeah, Microsoft and Google, because they both make cool shit. I honestly do kind of like Cisco because no matter what offices are being built, those offices have networks. Those networks are built out of switches. Cisco has that whole deal by the balls, them and Netgear. But Cisco Meraki's network stuff, I'm not sponsored by Cisco, so but
not
sure
yet.
sounds like you are.
Not yet. Not
but
with that attitude.
what I've seen from
Get in there,
what
boy.
I've seen from Meraki for enterprise networks is pretty cool. So like I don't hate Cisco. So yeah, Ron's right. Fucking Meraki, because yeah, it's a whole IT is a whole thing, okay? And it's but I think that's not fucking going anywhere. So if you want something that's somewhat technological and is going to have sales pretty consistently as long as the business cycle is okay, Cisco's going to do all right, but that's just my personal take. I wouldn't full port them. Obviously, I'd be going for more just equal weighted S&P personally, because I don't want to pick winners and losers, and trying to pick out an emerging technology as some sort of big hit winner is just asking to get rugged or get stuck holding something forever unless you're right about that technology. And in that case, you may as well just get exposure to the big boys because they're the ones who are able to pump the real money into it that it needs, like quantum, like nuclear reactors, that kind of shit.
Well,
There are some things like
Biotech?
solid state batteries.
Yeah,
or
I want to say
like climate engineering hardware that really is going to be driven by like probably a wave of penny stocks, and there will be winners and losers, but
at that point just buy private equity then, because private equity is going to be in it.
So this discussion is centered a lot around tech and what do you invest in with tech, but I think like for someone like me who really has, loves the data and has gotten real deep into the options data just from a love of understanding complex systems, and who has investments of their own, but maybe isn't sitting around for 8 hours a day, able to, do all of these things. I would say, if shit hit the fan, the guiding principle should be own things that people need.
Yeah.
I don't think it has to be more complicated than that.
No, but they're talking about new technologies, and they're talking about the I guess the whole question asks about what first is when it is time to go long stocks again, what kind of companies, and then also what non-AI emerging technologies are on the horizon. I think that you're right. Like there's the mixture.
Avoiding if you get outside of shut the fuck up, Ron. Let me finish my point. God damn it. If everything hits the fan and everyone's kind of losing their mind, it's really easy to think about what you're going to do before that happens. But then you get punched in the face and all of a sudden your plans go out the window. Own things people need, right?
No. Why? Because the market never values those companies as being worth
AT&T.
Yeah, what's AT&T's forward PE?
I don't know. I bought it at like $13.
You know what people need, JFresh? They need treasuries.
You did. You did tell me to buy that, and I did buy it.
Yeah, because it was at the time it was extraordinarily discounted relative to its potential valuation. but it's not as much anymore. You know, it's got a
No,
dividend
yeah.
yield, and that's really cool. You know, but no, I mean, like, I mean, this person's clearly asking about growth, and you were simply, I mean, first of all, the P's on most of those stocks, most of those like consumer non-durables, consumer services, things that like are the bedrock of, you know, the last century of American corporatism. Those stocks really don't change much in a market crash. Like, they're not going to go down substantially. No one's going to run for the door on like Coca-Cola, you know?
Yeah.
And it's like, they're just not going to change. And so you're not getting a discount, but you're just buying them. And you can pretty much buy them at any time. Procter and Gamble, stuff like
Unless
that.
there's a volatility event, and then you can probably buy them cheap because people are just getting liquidated.
Sure.
Well,
Yeah.
I think that's the scenario that we would have to be running into, right?
Yeah,
I mean,
you'd have to. It would be an
if
opportunity
you're
that is
just talking about
short-lived
if you're just
and
talking
big.
about another vol event, then it's buy everything. Who cares, right?
Yeah,
No,
Just
exactly.
go long.
RSP.
even in vol events, things like Kroger just don't move much.
Yeah, right. Because no one really
You know,
has a ton of it. It's all equal weighted or whatever.
no one's majorly so. I mean, like, unless like major private equity institutions like BlackRock and Blackstone and
Yeah, if BlackRock
Vanguard
blew
are
up, Kroger would go down 10%.
going under. Those stocks
I
are
guess-
just not going to move.
I guess the way I think about it is we've been in buy the dip mode now since 2008, which
Yeah.
if the market goes down, buy the dip. Like, that's been the winning strategy, and it's going to win.
Well, it's just the
until
winning
it doesn't.
strategy for
And so
time immemorial.
if we're talking about a buy the dip, then buy the dip, and that's it. If we're talking about a change, like an actual breakdown in a long-term strategy,
That's called a lost decade, and at that point, you want commodities.
But I think that there is a chance that one of those will happen, and you know, I don't want to put my neck out there and say.
Well, at that
something
point,
like
it's at
that
that point, it's
because-
less about. At that point, it is less about the company and more about your purchasing power, right? And so, if we're talking about something that is actually serious and a long-term risk coming to fruition, such as a currency risk, then you have to start looking at things like which countries are less likely to have to implement the biggest austerity measures in order to stay successful and liquid. And you go for those guys because their currencies are going to go through the roof. And that's what you just hold in that currency for as long as you can until you see light at the end of the tunnel, and then you start buying everything.
I
right?
think it's fair to say that this question is impossible to answer.
It is very hard to answer. So let's move on to the next one, huh?
I don't know. Let's give Girk the last. I know Ron wants to go to bed because Ron hates work and all
He's
things
also
that are
old.
magical.
I'm just saying there are emerging technologies that are not AI that are interesting.
There are
So-
there absolutely are, and keep your ear to the ground.
I will
on
say
it.
I love the
think-
battery discussion because batteries. Yes, I mean
I'm
batteries.
gonna make a call out here. Toyota in 10 years.
Ooh, what are you thinking? Hardware or software?
Well, I
or
think the
both?
yen's about as low as anyone's going to reasonably let it get. And I think they have quietly behind the scenes been working on solid state battery tech for almost a decade.
They keep coming out with
And-
that's suspicious though. They keep coming out with articles about how great it is, but they never
Release anything. Yeah. Well,
there's no money
supposedly,
shot.
supposedly their next generation of composite materials or whatever is really advanced, and they're ready to start getting like 600 mile range cars on the road and stuff like that. But
I would buy a 600-mile range EV for sure. That
I
sounds
think
Thank you
nice.
for listening to
I think
Volstars, a
I know.
GammaStrike
And
production.
I think it really
Please be sure to
impacts
subscribe and check out our
a
website
wide
at
enough range
app.gammastrike.com.
of potential industries. Like, if you have solid state batteries that have really, really high energy density, that's going to affect not only EV, but the whole economic infrastructure of EVs. Right. And that's going to affect grid design in the US because, people are going to be able to rely on solar a lot more in their own homes or entirely on solar if their backup batteries are big enough and cheap enough. Aircrafts, right? EV aircraft and like urban
You trying to dox
aircraft.
me, bro?
No,
Well,
but all of these like all of those industries, like the whole airline industry could be completely revamped from the ground up if it became possible to fly commercial flights with electronic batteries.
oh fuck yeah. It would
So I
revolutionize
mean,
transit.
I think for me, like that's the next big one that seems feasible with everything we currently have. It doesn't require any massive technological breakthrough, and it has a broad enough impact to be equivalent to something.
What
like
you're saying
AI.
is offensive to me. You don't think that I'm doing dramatic technological breakthroughs? Anyway, I will say I like Toyota from an
Stop trying
engineering
to dox
standpoint.
yourself.
I know nothing about, like the stock price and all that. I haven't done any due diligence on Toyota, but at least from an engineering standpoint, I mean, the hybrid system it's a work of art. It really is. Like their hybrid technology system was ahead of its time and just an elegant, beautiful, well implemented system that if they can do that, they can do any of this shit. I would say if I was going to bet on anybody, it'd be Toyota. I mean, they just have excellent work there.
Well,
Yeah.
okay. Well, the next few questions have to do with: are we going to all-time highs? Volatility under control? BOJ rate decision. I think we kind of covered that in this whole entire fucking
Yeah,
thing.
I think
So
we can
I
skip
mean,
that one.
Well, do we want to update that now that futures are down 70 bips?
I was gonna say that since we started this podcast, Bitcoin has fallen another $1,000.
SPX is down 70 bips in futures market. So
Yeah.
I feel like at this point we've had too much leading information. It's just cheating.
It's true. But I mean, but I think everything we said holds, though. It's a tenuous hold by short vol that is predicated on this whole thing where if it stays above 6,800, we get a happy ending and the Santa rally is complete. I think that's about right.
I'm kind of long as fuck yen right now, so I hope the BOJ cuts or raises rather.
That'd be fun.
Fed cuts.
When have you not been long yen?
I feel like you're always long as fuck yen.
I am.
Yeah, it's like 3/4 this guy's values in yen.
You're just talking your own book at this point.
Right.
All right.
Yeah. So yeah.
Yeah. The Japanese basically invented cuckoldry. They're not just gonna willy-nilly raise rates.
Well, it keeps going to 158, 160. Like, how can I not?
Yeah, the
turn all my
pain
dollars
is part
into
of
yen?
it. The pain is
When that
part of the
happens.
pleasure.
And then it goes up, and I turn them back into dollars, and it's amazing.
They can't release without the pain. The pain is part of the pleasure.
See with the yen trade for Girk is more like financial husbandry. Okay, he's raising an animal, he feeds it, and then it grows up, and then he slaughters it.
Yeah, and then I wait till a new one is born.
Yeah, exactly. Finds a good one at auction, brings it home, fattens it up, makes foie gras.
All right, Dork.
Yeah,
it's going to be about that time. You want to just switch to stupid bets?
Yeah, I think it's time. Let's fucking hit it. Stupid bets, stupid bets. Who's gonna win? Who's gonna lose? I'm fucking pissed.
Dork,
I'm fucking pissed about this one.
I want to say now that I just laughed during that, you chuckling during my intros always breaks my focus.
Well, your intros are too good, dude. They're always. I don't know how you manage to yank these out of your ass. They're always fucking hilarious. Okay,
well,
so
I'll just take the compliment gracefully.
Yeah, you stop talking about fucking Matt Gates.
All right, I've got a good stupid bet this week. Hear me out.
Wait. We got to recap
Shit.
first.
Well,
we got to
hold on.
recap. I'm pissed.
You won.
You won, and I am
by
pissed
like
that you
6
won.
bips.
Yeah.
I think the new thing should be the winner picks the next stupid bet.
That's fine. That's fine because I don't have one this week. But I would just like to say before we move on that the CME going down for hours the night before Black Friday, I was pretty close to getting my ridiculously stupid bet of a limit down. Closer than I ever imagined I would get.
Technically, you did get a market freeze.
This is a complicated one. Does he win? No, it wasn't a limit down. He said limit
was
down.
not limit down.
I'm not even advocating
It was limit
that I have
data center go down.
If you had not chosen limit down and you had simply said halt,
yeah, he would win.
You would have looked like an absolute god.
I am not advocating for me to have any claim to this week's stupid bet. I'm just saying that I feel like it was a little closer than it should have been.
Yeah, that was interesting for sure. But I'm pretty fucking angry that I said 85 basis points up. We went up 54 basis points. Kirk said flat, but his flat was closer to what it was than my up.
I said 30 bips up. You said 85 bips up, trying to one-up me on the day.
Fuck you.
Yeah.
Goddamn prick.
Why did you pick your own range? You could have picked down, but not limit down.
Fuck. You goddamn fuck.
Dork.
What?
Dork.
What?
Did you learn anything?
Yeah, Girk's an asshole.
Nope, you didn't learn anything. Next time, go 31 bips up. Price is Right rules.
Oh my God.
Yep, you would have won. Anyway, for this week's stupid bet, participants have to pick 2 answers correctly.
Oh shit!
All right.
Wow, you really put some work into this one.
I think I did. Or wait, hold on.
Okay.
I might be just wrong.
Hold on. Okay.
Okay.
I'm excited.
You have to pick Bank of Japan, cut or
raise,
cut or flat.
Hiker flat.
Wait,
or cut or flat?
Hmm?
Hiker flat or cut or flat?
Flat or cut or flat? They're not going to cut.
Are they going to cut? Hike? Okay.
Okay. Hiker flat.
Hiker flat.
Hike or no
flat.
hike. Okay.
And then the Fed for next week.
Ooh.
Hike. Wait, the Fed.
Cut or
what day is
flat.
the Fed?
Oh, so it's just
Fed's
a high.
following
Yeah.
week.
Fed's
Okay,
next
I
week.
got
So this is a 2-weeker.
Yeah.
So we're going to double up next week.
Yeah. Well,
Okay.
the winner just isn't picked until the second week.
Okay. I like this. We can kind of expand the range of our stupid bets.
Yeah.
Well, I'm just going to go for the nuclear option then. Can I go first?
Yeah.
Sure.
BOJ hike, Fed cut.
That is the nuclear option.
Let's fucking go. Limit down.
My yen is going to go up so much if Dork's right. I won't even care that he won.
Your yen's going to piss rocket, and our economy is going to go straight. No, it's not going to go straight into the gutter, but it'll be sad for a little bit.
So you said Japan hike, Fed cut, rip carry trade. I'm going to say, I mean, Japan has to be flat. They're cucks. They invented it. I'm not sure they invented it.
So you're saying BOJ cuck and Fed what? Fed cuck? Fed cuck or cut?
Same thing.
Well, yeah. God damn it.
I'm going to say the Fed is going to cut.
Okay.
So BOJ flat, Fed cut.
Gotcha.
I think BOJ hike, Fed flat.
Ooh. You think the Fed is actually going to go against every bone in their own body to try to save the carry trade?
Yeah.
If Japan actually hiked and then the Fed went flat when everything is screaming cut, for them at least, with their shitty models, I mean, that would basically, there's almost no other explanation than the carry trade must be preserved, right?
Yeah. Well, a Japan hike is effectively a Fed cut. So
Right. But
they don't need to
yeah.
cut if Japan hikes.
If the carry trade is that important.
No, they just don't need to. Takes the pressure off.
Well, that's the same. It's the same. Well, okay, but it's talking about first order effects versus second order effects. Japan hike technically would lead to second order effects that cause tightening in credit versus
I'm already
Fed
thinking
cutting,
about
which
fifth
I guess
order effects.
Oh,
which
shit.
is why I'm going to lose, because I wasted 500% of my energy.
You got the fifth derivative going now?
To get 0.1%.
You're on Crackle? Just wait till you find out about Pop. That's the final one that I know. I don't think there's any more after that with fancy names.
Are you just naming Rice Krispie elves?
No, so there's Jerk. That's the third derivative. Then there's Snap, which is the fourth. The fifth is Crackle. And then the sixth is Pop.
What's the seventh?
So Rice
No,
Krispie.
nobody knows. Yeah,
it's got to be Rice Krispie.
No, it literally,
elves.
the people who defined these terms were just being ha-ha funny guys, and they just went, Snap, Crackle, Pop.
Wait, you're talking about the derivatives of what exactly?
Acceleration, physical acceleration. Well, physical movement, displacement.
Okay, so these are just physics nerds, not finance nerds.
Yeah, these are just physics nerds.
So the problem with the financial naming methodology I've attributed to finance bros, but it's actually just the physicists that all the finance bros have been hiring that are the responsible
it's the
for
same
this
thing.
nonsense.
Yeah.
God damn it, it's not the same thing. The finance bros are not intelligent people.
No, but they hire people who have physics degrees because they think they're smart.
I didn't realize that this was physics all along. I've been blaming the finance.
It's all just math. I mean, they get the math kids to do the math, and then they just sit around and eat bonbons. You know, it's the way of the world. You know this. You're a math nerd. Think about it gets paid more than you. It's the economics bros.
I'm a math enjoyer. I'm not a math nerd.
You're a math enthusiast. God damn it.
All right, Ron, end this shit.
Yeah, put us out of our misery.
Thank you for listening to VolStars, a GammaStrike production. Please be sure to subscribe and check out our website at app.gammastrike.com.